Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome to another exciting episode of Alwasi TV. This evening we are joined by a very special guest. I'd love to welcome Hajj Turab Abbas Bank. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum salam wa rahmatullah.
How are you?
Alhamdulillah Rabbil Alameen. And yourself?
Alhamdulillah, mashkur Allah, alhamdulillah, alhamdulillah. Inshallah you found your way here easily and it wasn't too difficult.
Yep. I don't live too far, so it's very easy.
Oh, beautiful, beautiful. It's amazing to have you on. What are your first impressions?
Yeah, brilliant. Brilliant studio, great initiative.
It's all thanks to Sayyidina Hassan al-Mudarrisi, mashallah, with the team of volunteers and the passion and the drive that they've got.
Yeah.
Allah subhanahu wa ta'ala has gifted us with this opportunity.
Alhamdulillah Rabbil Alameen.
Alhamdulillah. Tell us a little bit about your background. I think your name is quite important and interesting, Hajj Turab Abbas Bank. And a little bit about yourself, about your family history and how you've come to be and how you've come to Australia. I believe you have got an exotic story to share.
Yeah, so my background, I'm from Kenya, born in Kenya. Dad is from Kenya and so is mum, but their respective backgrounds. My dad's background is from Zanzibar, which is an island off the east coast of Africa.
MashaAllah.
And mother's background is from India.
MashaAllah.
So maybe every time I tell somebody that I'm from Kenya, they say, well, you don't look black, you know. And I have to go through the whole rigmarole of explaining where my dad's background is from.
Yeah.
So it's probably a mixture of Omani and Indian from Zanzibar.
Mm.
And my mother was a Sikh before she reverted to becoming Muslim.
Subhanallah.
And we arrived in Australia in 87. So I went to school here and high school and university.
Were you local to this area, or where were you?
Yeah, so so when the coup happened in Kenya, it was quite dangerous, and my dad traveled. He was quite well traveled at the time. He basically wanted to find a place to migrate to, and the choice ended up being between either Sydney or maybe San Fran in the US.
Okay.
And thank God he chose Sydney.
Alhamdulillah.
The reason he chose Sydney was because when he traveled here, he met a brother by the name of Hajj Ridwan.
Oh, okay. Mashallah. We get around, yes,
yeah,
mashallah.
Yeah.
Mashallah.
And he introduced him to Sayyid Hashim.
Yes.
At Arncliffe Mosque.
Yes, I know. I grew up with Sayyid Hashim, yeah.
And my dad just fell in love with the mosque. He thought this is a good community because our life in Kenya was all centered around the mosque.
Yeah.
So our background is like the Khoja Shia Nashri.
Okay.
So in East Africa, they're quite well prevalent.
MashaAllah.
And the communities are always centered around the mosque and the community.
Is it a big number?
Yeah, very big and very well organized, very wealthy.
MashaAllah.
And they're basically, the Khojas are an interesting story in of themselves. You know, they were, I think this is generations back, Hindus that converted to becoming Ismaili. Shia, and then from being Ismailis, they became Shia Ithna Ashari.
MashaAllah.
And a big contingent of them were from the place of Gujarat in India.
Yes.
That ended up migrating to East Africa.
Wow.
So we were sort of part of that community. And because of my dad's history with community lifestyle, that's what attracted him to Australia, because of Al Zahra Mosque.
Subhanallah. That place is a wondrous place. I grew up there. That was the mosque. That was our central mosque for most of what we did. Marriages, burial ceremonies, all of the calendar events of the year, Shahr Ramadan, everything was there. I remember there was a Eid there. My first Ashura sort of experience, I remember I was walking down. They had that little bookshop at the front.
Yeah,
it was a house, they had just purchased at the time, and they had a little bookshop there. And I was in there trying to buy some books and stuff. I was actually on the way. You know how it's got the downhill driveway. As I was walking down, at that time I didn't know what Ashura was. I think I was too young to understand. But all I saw is a wall. The women had come out, and they were going to the cars or whatever the situation. To me, as a child, it looked like a wall of black. It was like the scariest thing ever. And it was night. And as they were walking, and I'm trying to walk as fast as I can, but obviously being little, they were much faster. And one of them stepped on the heel of my shoe. And I'm like, oh, freaked out. I turned around and she had the most Aussie accent. Oh, sorry, mate. I'm like, oh, it's okay. I'm like, oh, it's just, members of the community. Or it's probably people, because they had their faces covered and stuff like this back then. And I remember, throughout my childhood growing up there, it was a wondrous place. I was always nagging my parents to take us down there.
Yeah.
You feel it, don't you?
Yeah, I mean, it's the preeminent mosque for the Shia community, that and the mosque in Lakemba were probably the two mosques.
Yeah, the Lakemba one used to be the Shia one, yeah. Imam Ali,
yeah.
Oh, now it's called Ali ibn Abi Talib, but it used to be called Imam Ali Mosque.
Yeah. And
it was founded by the Shia community here.
That's right, yeah. And they had wonderful programs, Scouts, Arabic, and lots of great personnel back in the day that helped build things that we take for granted today, like, halal certification and,
Even in the school.
The schools, correct.
Yeah, we've got the big one down there with Al Zahra. We've also got the other ones. I think there was Belfield is one.
Yeah, Belfield. Now they've got Al Rahman College.
Yeah, they've got that one. And we've got the Imam Ali, which is the sponsor of our series, Imam Ali College, which is run by our esteemed Sayyid Hassan al-Mudarrisi as well. So it's amazing how, pockets of brilliance within the community grow this immense value that we all take for granted most times. My kids got a Belfield, and I remember I used to have them in a Sunni school as they all grew up, because I wanted them in an Islamic environment, but I didn't have any where I was living at the time. It was quite west. We didn't have a Shia community. I moved down here 2020, and this is when, in COVID and everything. So by the time all that was over, 2 years ago, basically you could say I'm 2 years into my Shia community experience down here. It's been the most amazing experience of my life. And it's just coming from a point where there is no community and there is no resources to a place where you've got abundant community and you've got abundant resources. I take every little thing as just magic.
Yeah, and we're still a young community.
Yeah.
When you compare our community to the Shia community in London, for example, very young community. And you can see how quickly we've developed and evolved. Considering the young, the age of our community as being sort of infants, we've actually grown quite quickly.
Well, I mean, this is the focus for us, isn't it? This is our focus of Alwasi TV. It's a big focus for the Mudarrisi family with Sayyid Hassan and his father and his two brothers. Around the school, around this is the youth. We recognize that the youth are the investment for the future, isn't it?
Yep.
And the more we invest in them, the more they are capable of taking on the torch and making it even better.
100%.
Alhamdulillah, mashallah. So what is it that you do for a living? What's your background? What's your specialty?
Yeah, so I was relatively good in maths in comparison to other subjects.
Mashallah.
So when I ended up at university, I first started doing actuarial science.
Okay.
And from
that's a big paying gig if you get to be an actuary.
Yeah.
There was a bloke I was doing my master's with them, and he was an actuary, and he was telling me about the fact that it's very rare. There's not many people that actually, it's very hard to do.
That's right.
And it's very rare that you find one. So that's an amazing thing that you found yourself in.
Yeah, so I didn't actually...
you should have finished it.
Yeah.
You should have finished it.
Yeah, so it's a funny story because in actuarial science, you really do it to become a fellow,
Yes.
And you need a certain grade point average in certain subjects to get that fellowship.
Absolutely.
I remember doing this one subject called combinatorial probability.
Mm-hmm.
And I did study at it quite hard. And I ended up getting a pass rather than a distinction. And so I had to wait a year to do it again.
Yes.
And then it was only when I was doing it the second time around that I realized they measure the distinction rate up on a bell curve. So they only give a certain limited number of students. So I decided, bugger this, because the second time I did, I got a pass again. I didn't get my... so I ended up doing applied finance.
Okay.
And then post finishing my applied finance degree, end up getting a job in a bank at Westpac.
Beautiful.
My first job was there, and then I continued studying.
So the first thing you probably get told when you tell people that story is that were you a teller at the bank, or because that's all the customer service side of it is what they see. They don't see the back end. What was it that you were doing at Westpac when you first joined?
Yeah, so the first role at Westpac was in back office operations role, and what that means is that there's a lot of services a bank provides, right? And there's a lot of different types of instruments that banks trade in. And there's a function, at the front end, which is generally meant to do with trading, right? And all the trades that are done at the front end need to be settled and is what is called in a back office. And I had a back office settlement role with products that had to do with credit derivatives.
Okay.
And
so for the audience, just I'll attempt to make that layman a little bit. Yeah. An instrument is simply the thing that you trade in. So it could be a share, it could be a mechanism in which there's a currency or a value exchange. You're talking there. So if you think in your mind, input, process, output. So your instruments are at the front. What you're doing is in the process area to try and generate the output. And the output is usually the flow of wealth from one end to the other, hopefully in the up direction.
Correct.
Yes.
Correct. Spot on.
I'm just dumbing it. I'm just dumb and I'm trying to dumb it down.
No. It's perfect. And so, I mean, there's many paths you can take with applied finance.
Yeah.
I just happened to take the first job that I could get at the time.
As we all did. We all did.
And so what I did is I continued my studies. I did end up doing a postgrad with a focus in investment management.
MashaAllah.
And then as you go through this sort of corporate career, there's many pathways you can access depending on how well you do.
And the people you know.
And the people you know as well.
That's a big deal.
That's a massive deal.
People don't understand how big of a deal that is until they get into a corporate environment. And it's usually their first manager that gives them that, if they're a good first manager, gives them that exposure. And then, because what do they say? A good manager never keeps their staff because they keep promoting them.
100%.
Yeah.
100%. And, if I was to, I've got a 10-year-old boy at the moment. I've got two boys, 10 and 6.
MashaAllah.
And if I was to think about them going into finance or investment management, because of the experience I've gained over my career, the pathways that I would advise would be totally different the one that I took.
It's every father you speak to has the exact same story. I'm the same with my kids. My brothers are the same with their kids. Anyone you speak to, just because you had to go through you had to make those mistakes and experiences. The lessons that you've learned are invaluable, but you wouldn't wish it on anyone.
No, I went around it the hard way.
Yes.
But still blessed, alhamdulillah.
Alhamdulillah. It's all in Allah's hands.
Allah's
absolutely.
Blessed, and sustenance comes from Allah. At the end of the day, all of this is a journey, and you learn through it.
Yeah, absolutely.
But you're right. I would totally advise, even in university, I would advise, my son to think about university in a totally different way to the way I thought about it.
Yeah. Well, I mean, the university side of things, I didn't understand the intricacies of things like which uni you choose and the classmates and the friends you make.
Yeah.
Because you could tell the difference between my under and my postgrad. I did engineering.
Okay.
So I did the engineering degree at Western Sydney. I made some great friends, lifelong friends. They're still my friends. And then graduated with a practical degree that I applied and worked in. But then when I did the postgraduate at Macquarie, I made a network. And that's where the favors come in. That's where the opportunities come in. That's where the experiences come in. And so the two universities position themselves, and I'm not saying this is representative of the universities in any way because I don't want to get censored on YouTube, but the universities are fine whichever one you choose, but sometimes, depending on the circle you're in and the degree you're in and the university you're in and the stages that they're in terms of its development differs.
100%. Yeah, like actual science was only offered at New South Wales and Macquarie, you know. But yeah, 100%. So at my time at Westpac, it just moved from one role to another within Westpac. I stayed there for about 4 years.
How many roles in 4 years? I bet you it's many.
I went through 3.
MashaAllah. Yeah, that's almost a role a year.
Yeah.
Yeah.
And alhamdulillah, again, I was very blessed with good bosses and the like, you know.
Westpac is a very reputable
it's one of the big 4. Yeah. You know, you get a bit of exposure to the big 4 banks.
That's the advantage of working for a larger organization like that. You really do have a wide breadth of opportunities for experience.
Correct.
In comparison to working to a small, more specialized organization.
Yeah.
It's often better to start with the larger, find your niche, then move to a smaller.
Yeah. Yeah, and they end up paying for all my education on postgrad studies,
MashaAllah.
You know. And then sort of I stayed in that back office sort of role and then moved to BNP Paribas, which is a French bank.
Okay, what's it called, sorry?
BNP Paribas, but they pronounce it as BNP Paribas.
Okay.
Didn't last there long. So the boss pulled me up actually for praying in a meeting room, and he didn't like that. This was during my probation period, and you know, people told me that I probably had a case there for you know, for taking things to HR and you know stuff like that.
Yeah.
And at the time, there was actually a case going on in the media, and I think he was a bit scared about that himself.
Yeah.
But
either which way, it's not an environment you want to be in.
Correct.
Long term.
Correct. And you know, it was just a way.
And it's a test.
100%.
From Allah. Are you going to prioritize your religion, or are you going to prioritize your income? And either which way, I bet you made more leaving than you would have staying.
Yeah. It was every single time this has happened in my career. It's happened a couple of times.
Yeah.
It's as if Allah has said, "Listen, your time here is done. I need you to go here."
Sometimes we need that nudge. We need that. It makes it obvious for us. You know, Ridwan, khalas. Yeah, this is finished now. Move on.
Yeah. 100%. You know, every time it's been beneficial.
Yeah.
All the time. So yeah, alhamdulillah. And then what happened is I moved on to my first investment management role at BT Investment Management. And that's when I started doing something called the CFA. So this is called a Chartered Financial Analyst designation.
Okay.
It's got a very high failure rate.
Mm-hmm. And that qualifies you to give advice, right?
That qualifies you. Yes, it can qualify you to give advice because there's certain requirements with PS 146 and stuff like that. It ticks all those boxes. So
just a point there to all of you YouTubers out there. In Australia, if you are not certified, qualified, it's illegal for you to give financial advice. So if you're there as a young person on your phone or on your device looking for financial advice for free off YouTube, they're off. Most of them are fraudulent. All of them are fraudulent unless they are certified and they've got a. So if you need financial advice, go and get someone paid for to give, because that's the only way in Sydney. That's legal for you to get proper advice, because all the time they will always preface it with, this is not advice, but then follow with advice.
With advice, or tips to get rich quick.
Yeah. Oh, yeah.
Yeah.
Sorry about that.
Yeah, so I ended up doing a CFA designation. I found that course to be probably the best course I've done in my life.
Mm-hmm.
It was 3 years. The difficulty about that is not the quality of the work, but it's more the quantity, right?
High volume.
High volume. So you need to do if this is whilst you're working, you need to do approximately 20 to 25 hours a week of study.
Wow.
Over 3 years.
On top of balancing a career and a family.
Correct.
And social life, if there is any left.
That's why the failure rate for that is like in the high 70%.
Wow.
Not many people get through it. But what that does give you is these sort of little 3 letters that you get at the end of your name, which gives employers, really gives them the knowledge that, you've done the work.
The assurance.
Yeah. That, this person's at the very least, they've done the work.
Yeah.
So and that opens up doors. So that opened up a door for me to work for a superannuation fund, Rest Industry Super.
Yes,
at the time.
that was, I think, one of my first ones was Rest.
Yeah. So it's the biggest fund by member base in Australia.
Yeah.
It covers generally the retail industry.
Yes, because I was in retail at the start.
Yeah.
I was a cashier, my first job.
So because of that, that fund generally is in a very privileged position because it gets all the young people,
New starters.
starters.
And then they stay, or most likely will stay for
Correct.
as they move.
Correct. So the trick is not losing them. Like retention was the biggest thing. If you can keep the person that's entered that super fund through their working career, that's a big benefit to the fund. And
just a word of advice, and this is not advice. I took up. I had a new employer, and I was running through my superannuation, and I had someone give me some advice to go and consolidate my superannuation. And there's a tool now you can use on the ATO website, under MyGov, etc., that will consolidate it for you. I had like 6. I had no idea I had 6. I thought I had 2. I was sure I had 2 because it was the old employer and then the new one, and the new one turned out to be good. So all I wanted to really do was consolidate that last one into the new one. I thought I just had the 2, but when I put in my details onto the website, it came back to me saying, "Would you like to consolidate 6?"
Yeah,
and I'm like, "Yeah." There's money out there. That's your money. Make sure you track it where it's going.
Yeah, and you save by consolidating. You save on fees,
and you have a larger
insurance. You have a high balance.
Yes,
everything becomes more efficient.
Absolutely. Yeah. For a young person starting out, they're graduating high school. Yeah. They've just got their tax file number. They're starting a first job. Your first bit of advice, or social. I wouldn't say financial advice, but just behavioral advice around money. Yeah. What would you recommend to someone just starting out, keeping front of mind? They're about to get paid their first $1,000 or whatever it is from their part-time job. Yeah. What do they do with that money?
Can I take a step back just a little bit before we go into that?
Yes, absolutely.
If that's all right.
Yeah.
So I think it's very important as a child is going through high school, before even getting into that stage of making money, where financial literacy is a key component of their, if not formal curriculum, then informal through at least the parents.
Or through the Muslim, the mosque should have, or the centres should run financial literacy courses.
100%.
Would you be open to running them?
I would be 100% open.
Sayyidina, pencil that in. Financial literacy course. You're locked in.
Yeah, because I had a brother the other day that approached me. He's got two daughters. Beautiful brother. Nice. He said, "Look, I've got a little bit of savings on the side. I want to put a bit of savings in my daughter's accounts. What do you recommend I do?" I told him, "Look, you can save ordinarily by just putting it in a bank, or you can use this savings in a way to educate your daughters about how to think about money and savings and investing, and they'll learn through that process." So I went through. We go through a process by which every 6 weeks or 2 months we meet up.
Yeah,
and we'll just maybe talk about a stock or a company.
Yeah,
with his daughters.
Are you into stocks?
Yeah,
I'm into stocks.
Yeah,
we need to meet up and talk about. Stocks. Okay. Woolworths is quite attractive at the moment.
Yeah, that's right. I've actually got it.
Yeah, is it? Yeah, it is.
Yeah.
I was running some formulas today. They're quite good.
Okay.
It's anyway, continue, please. Sorry.
Yeah. So yes, I think that's elementary. So if you can start there, then that at least gives somebody a bit of knowledge about, wealth and wealth creation. And
that comes back to the instruments that you mentioned before. You've got multiple ways. It's not always buying a house.
Yeah.
There are other ways to invest.
Correct. But at least when you're doing that through schooling years and then they end up in uni or not, whatever, when they get their first paycheck, then to your question,
they know what to do.
They know what to do. And
they have a plan for it before they get it.
Ahsant. You've got to have a plan.
And ultimately, the view is that all the rizq is from Allah.
Yeah.
The stronger you are and the smarter you are, because it's difficult to give if you don't have. So the stronger you are, the stronger your community is.
100%.
Because you've got their back.
100%.
And they've got yours.
Yeah. 100%. And like my friends and I talk about the movie The Matrix.
Yeah, I love that
right?
movie.
Like everyone's plugged in. You got to, if we're financially independent, it gives us greater ability to plug out of the matrix and to be independent and to be powerful as a community.
Well, it allows you allows you to have the choices you want.
Correct.
Like, for example, your choice to leave that place that doesn't have doesn't like you praying.
Yeah.
If you were in such a situation financially where you were desperate and there was no, you were reliant on that next paycheck, it'd be a very difficult decision for you to leave. Way more difficult than it would be if you had some money in the bank and your ability to rely on yourself for the next 3 to 6 months without necessarily getting a new income. But being able to make that move gives you the strength to be a better Muslim generally.
100%.
And on top of that, your strength right now with this story that you've just shared, pain, you've gone through a massive journey, you've struggled through, personalities, positions and environments to get yourself where you are. The brother that's learning from you is going to, pass that on to generations and his kids are passing on generations. Sadaqah Jariyah, right? That's the aim, is to have a sadaqah that keeps on giving and it's generational, which is incredibly powerful.
Yeah, 100%, 100%. And like trapping yourself in debt, right, is dangerous. It actually hinders that process.
Yeah.
So when
debt has a purpose for a period.
Correct.
But the mindset some non-Muslims have is that debt is just a part of life. But it isn't. It's there for a period. And then the goal is to stop that and then move on to wealth growth, isn't it?
Yeah. And look, debt can be a good thing, right? Depending on the purpose, how you use it, and the goals you're trying to achieve, right? So, for example, in a lot of companies, when you think about financial management in a very big company level, debt, a healthy level of debt, is actually called an optimal level of debt. Yeah. To try and reduce your taxable income.
Cost of capital.
Right, yeah. And you're
sometimes it's cheaper to get debt than it is to spend capital that you would normally invest for a return.
Yep. And so debt can be used in a positive way. In a simple way for like younger viewers of this podcast, like a credit card, for example. Generally, credit cards are a big no-no, right? Because there's no discipline.
I don't have one.
Yeah.
Never had one. Never will.
But if you do have the discipline, you can actually defer your purchases in terms of the interest that you're paying on them for a period of 30 days. Or what the
provided you could make a return on that period, and it comes down to the behavior of it. I was speaking I had a behavioral psychologist professor for one of my courses. We were talking about it, and he said that's the thing these companies are reliant on. That's what these large credit card companies
100%.
Are reliant on.
Yeah.
You need to just make one mistake in a 12-month period, and they've doubled their return.
Yep.
You could hit the mark behaviorally by paying it back on time every month for 11 months. Yeah. You missed that 1 month, the rate of interest on that is so high, they've scored.
So the late payments are like 18% or something like that, and they're prying on you not being disciplined.
It's not just discipline. Humans are humans. You get circumstances. Things come up. You've got emergency situations. And the what he described to me was that, you heard the story of the elephant? Elephants are very small when they're far away. Yeah. Right? So the debt or the bills or whatever, I can pay that off. It's 6 months away. Yeah. It's very small. It's a small problem, far away. Yeah. But when that elephant comes running at you, it's going to grow very big very quickly. And then suddenly it's a big problem that you cannot handle. And so behaviorally, and we are triggered, most of us, psychologically to be optimistic about things. Yeah. We overly inflate our ability to do things. I can lift that weight. How many injuries are happening in the gym because someone's put too much weight on a bar or something? And, it's this over-optimistic sort of, not over-optimistic, but an optimistic mindset, which is a good thing. We need that generally. Yeah. But when a company is geared up, to take advantage of one misstep, sometimes it just happens.
Yeah, and that's why, coming back to your question about a young person with a paycheck, what do they do? So I wouldn't advise loading up on debt at such a young age.
Yeah.
A young person would probably be interested in driving a fancy car. As a guy, even when I was growing up, I loved cars.
Yeah, I love cars.
Yeah, but that's the temptation when you have a bit of money, is to load up on debt and sort of splurge on assets that are not going to sort of benefit your growth or wealth creation over the long term. So, young person, maybe gets $1,000 as their first paycheck. I'd really advise to think about a goal and think about a financial goal. And the goals could be, multifaceted. They don't have to be necessarily around wealth creation.
And it doesn't have to be one goal either.
Yeah, and they can be around spiritual.
And giving back to the community is part of that.
Correct.
It must be a part of that.
Yeah.
It's religiously a part of that.
Yeah.
Khums.
Yeah.
Or I don't want to claim to be. I don't know if it's khums or otherwise. I'm not a religious expert in the matter. But giving is always a good thing.
Yeah.
But sometimes it's I get it. I don't know the intricacies of the rulings around it. So maybe it's not khums. Maybe it's something else. Because I don't know if you got to wait a period on it or something. I don't know. But ultimately speaking, to give is the biggest thing you can do.
100%. Yeah. So the goals could be aligned around spiritual upliftment. Yeah. Going for an umrah or a ziyarat, because for a young person that can change their life.
Gifting your parents something on their birthday that they really want.
Yeah.
How satisfying is it for you as a child of that person that's struggled their entire life or worked very hard their entire life to provide for you, that suddenly you can gift them something that they will cherish. And as a parent, if my kids ever give me something, anything, even it hasn't, most of my birthday, I tell them, just draw me, because my kids are very artistic. I say, draw me something very beautiful, very nice. And I cherish them. I have them all over the house.
Yeah.
But imagine being able to, gift your dad something that's, $500 worth of whatever.
Yeah. I mean, exactly, so you could have, like multifaceted goals. It could be even educational goals.
I think that we've talked about it in a roundabout way. Yeah. But what do you think about financial mentoring as a thing, a young person to either invest in, whether it's paid financial mentoring or such as a member of the community, such as yourself or others, with a financial acumen? How valuable is that?
Yeah, look, I think it's invaluable, because young people get trapped into plunging themselves into things that really they put themselves behind the eight ball before they've even started their life. Like if you think about even like marriage, like even
Insta famous, they see it all. Suddenly they've got the money, they want to just.
We're in a TikTok world, right?
Yeah.
Instagram world that, like everything's about displaying.
Look rich.
Yeah.
Don't be rich.
Yeah.
Yeah. I think the Sayyid Hassan and I were talking about this a couple of weeks ago around being genuine and, the topics relate, but they're not at first. So, for example, I could go out, buy myself a thobe and a hat and sit here and talk about religion, and I know just the bits and pieces of it, and I could make out like I know what I'm talking about. And then people will listen to me and take lessons from it, even though I'm not a reliable source for religious. So when you see that person at the mosque who's flashy and shows money and he's got money, and that's not necessarily a good place for financial advice either, because it's actually in some regards it's the wrong place to be looking. I love your laugh. It's sometimes you've got to, as a parent as well, we responsibility with our children and stuff. You've got to be really careful where they're getting their advice from, religiously and financially.
Yeah, 100%.
And TikTok and Instagram are the most dangerous tools, and other social media platforms for that, because it's too easy to fall into fast money trap mindset.
Yeah, and there's all these things about trading, like
I'll buy this, or drop shipping this,
and and you know, so I'd be definitely up for that mentoring work because I think it's invaluable.
Yeah.
When you think about young people even getting married, right, and you think about the things that they focus on in their marriage, you know, generally, it's sometimes it's not a very healthy. It's not a very healthy outlook on how they want to get married. They want to have, you know, an entourage of, you know, all these lovely cars.
The wedding
and
is
bikes.
more, and then they go home in the Corolla.
Correct. You know, yeah,
it's true.
you know, videos and, you know, all these luxury things. And the thing is that, you know, have you actually put a deposit on?
Do you have a place to sleep tonight?
Sleep, yeah.
You know, this is it. Yeah, absolutely. Yeah, you see that everywhere. You see that everywhere.
So you want to start that really early.
Yeah.
You want to start that goal setting.
And it's grounded in reality. And I think we as Shia have the gift of Imam al-Hussein and the gift of the 12 Imams the way around. Any lesson you hear from them is like a real lesson. There's no fluff about it. It's real solid. And it's all about being genuinely you. And that's opposed to that Insta-rich stuff because it's, are you being genuinely you when you're doing that?
Yeah.
Or are you for the world or are you building your ikhra?
Yes.
You know, is what you're doing being a positive influence on the world, building iman in people, or are you trying to grow your ego and be that, you know, for you? Are you doing it for Allah? Are you doing it for your imam? Your imam is here. He's alive. He's watching you. Awesome. And there's no lying about that. He can see the reality of the circumstance.
Yeah.
He knows what you're having for dinner at home versus that $500 meal you're having to show off.
Yeah.
You know?
Yeah. It's I actually saw a good video of Sayyid Hassan.
Sayyid Hassan Madarasi?
Sayyid Hassan Nasrallah.
Oh, okay.
Yeah. But just in terms of saying that the root of all evil is the love of this world, right? And he goes on to explain that. But it's to that point where, you know, are you really living a superficial life versus living a real life? And getting
the reality of it.
Yeah.
The reality check. Because there's no hiding it. You need to sit there by yourself and look at the wall and think, what I've done, because we have this in our religion where you think about what you've done in the day and what have you done right, what have you done wrong, and you hasib, like a hisab al-nafs, right? It's part of the three nafs from the Quran is the three nafs, nafs al-lawama, nafs al-mutma'inna, nafs al-ammara bis-su'. So one's pulling you to the left, one's pulling you to the right, and one, you got to sit there and go, realistically, between me and my nafs, am I living a genuine life? Have I genuinely contributed to someone, or am I just flashing?
Yeah.
And then that flashing, that's for shaitan. You're feeding that. And then what happens with that? You get ghiba. You get jealousy because the people are seeing you and they wish to hedge what you had. And then you go back to the Quran with the story of Qarun and how he was greedy and wanted. And the day before he died, everyone was wishing they were Qarun. And then when they all collapsed and he fell under the ground and his death was because of the weight of his own gold, everyone said, thank God I'm not Qarun. I don't wish to be him. Like the next day, right? And that's a real thing in our community. People have gone up and have perished as a result of just, not living that genuine life and that sort of negativity around, just trying to fake it.
Yeah. So so I think in that process with financial literacy, it's important to understand for young people what is an actual asset.
Yeah. And so you've got your basic classes. Do you want to run through some of those? What sort of investment classes that are commonly available? Yeah.
So you've got cash.
That's a very good option.
That's, and cash can be invested in a bank, through savings rates that you get, or you can even put them for longer periods of time in term deposits.
Mm-hmm.
And at the moment, if you put in a term deposit for about 12 months, you're getting about 5% per annum. Then you've got Australian shares or equities. You can even go into international shares, right? With Australian shares, you're getting a return of around 9% per annum.
On average.
The volatility on that is around nearly doubled. It's about 15%.
Depending on what you're investing in.
Yeah, depending on
but you got the high risk.
But generally, if you're in like the index,
yes,
generally that's what you're getting. international shares, you're getting about the same. The advantage with Australian shares, and we can get into technicalities of it, with franking credits and the like.
Yes.
But that's another asset class. So it's cash, shares. Then you got another big asset class called fixed income, and they're generally investments around bonds. You probably hear this. It's a loan basically, and the bonds can be issued either by the government, semi-government agencies, or corporates.
So a loan to the government from you, not you taking a loan. So the bond is you give the government the money, and they've bonded to you now. They've given you a paper saying we will give you a return of X, Y, and Z, and you can then sell that promise back to you to other people, and for a small profit.
Correct. So the bond, there's two components of the bond. Is the price of the bond, and it gives you a coupon, which is like a rent. If you're owning a house, it's basically the coupon that you're clipping off it.
That's right.
And then
so the coupon is the periodic payments to you, promised on that paper. So they'll give you a coupon rate. Say, for example, if it's 12 monthly, or if it's 5 yearly, or some are longer. Particularly around wartime, it's way longer. But essentially, they'll promise you to pay you a certain amount on a certain date sometime in the future, and as a result of that, people trust the reliability of governments more than they would trust the reliability of companies, particularly in volatile periods. So that makes the value of that go up.
Correct. So the probability of default will change through an economic cycle and affect different parts of the economy in different ways. And so the credit spread that changes will reflect that. And you can make money or lose money depending on that. So people trade on that. But bonds are generally seen as a safe haven asset to protect against equities. But as we know, we'll take a little bit of a step back with interest rates. They govern.
I gotta love your RBA, mate. You gotta love it.
So they govern, a lot of these.
So
things.
what is the relationship between the RBA every month making an announcement about the mood they're in, and the mortgage rates and the people's pain in terms of what they pay on their mortgages?
Okay, so the RBA rate is a cash rate, and that basically is in terms of duration, it's the shortest duration you've got there. And the link between that and a mortgage rate is that mortgages are generally taken for longer periods of time. So generally there's a premium that's applied to that. So if the RBA rate is like 4%, for example, you'll find a typical mortgage rate at 6.5%. Okay, so when people are thinking about rates, and there's all this news about rates.
Yes, we've had quite a long period of talking about that.
Yeah, so it's generally around. The talk about rates has all been in relation to inflation, right? But why people are interested in it is because at the end of the day, it impacts their back pocket with the amount of mortgage that they pay. Generally, in Australia, we've got a high level of household debt, so people are always worried about rates coming down, so they have to pay less on their mortgage. But it actually impacts everything.
Cost of transport, cost of food.
Correct.
Because it's the cost of where they're getting their capital from.
It's the cost of money.
Or one of the locations. Because they can get it internationally and they can get it privately. But generally, the large majority of it, that would be the location.
Yeah. So, exactly. It's the cost of capital. So with bonds, for example, they're seen as a defensive asset. But in 2022, when rates were extremely low and they went extremely high, there's an inverse relationship between interest rates and bond prices. So in that year, people that had equities and bonds, typical portfolios that had, 60% equities, 40% bonds, they did really, really badly. So what people try and do now is they think about investing in other asset classes. So there's also property and infrastructure. So you've got cash, equities, bonds, property, infrastructure.
Yep.
But you've also got a whole other asset class which are called alternatives. And this is getting a lot of prominence in terms of growth alternatives and defensive alternatives.
Yeah.
And these products are generally not offered to the retail market.
They're more of an institutional market, for the big boys, big super funds and banks and pension funds, governments, like the Future Fund,
invest in these sort of things. But increasingly, what they're trying to do now is, because I'm heavily researching this space in the retail world, they're getting more products nowadays that are accessible to retail investors.
Yeah. So the future fund for those who are potentially overseas or not in New South Wales is a New South Wales government fund.
It's a federal, yeah.
Is it federal or New South?
Yeah, it's federal.
So it's a federal fund used to essentially grow Australia's ability to invest in its infrastructure and whatever into the future. However, there has been some controversy around that recently, hasn't there? Well, not recently, a couple of years ago.
Yeah. I mean,
dipping.
The controversy is that governments can dip into it to fund their budget deficits.
At key points in the election cycle.
Yeah, which is not the intent for why it was initially
right.
created. That's where the controversy.
They've changed the charter basically.
Yeah,
what is it? It's initial charter.
Yeah, but for investors and young people, before getting into any of these asset classes and investing themselves, it's very important to learn about the pitfalls and risks that apply to all of them.
I remember when I was at it was high school, we had the share market game, and it's a metaphor. You can play that now. If you jump onto the ASX website, the Australian Stock Exchange website, there's a share market game there where you could essentially invest without using actual money into the market at certain points, and it's as if you're doing it for real, but there's no actual money involved, and you're not actually impacting the market or interacting with the market in any real way, and that allows you to sort of try out different things, which is a really good tool for schools to use.
Yeah,
because you can go through and invest in a whole portfolio and figure out what works and what doesn't based off real life reactions to your investment.
That's what I'd highly recommend. So I'd highly recommend that young people think about investing in stocks, right? Not for the perspective of putting the actual money in, but before they've even got money, play the game.
Yeah.
What it does is it gets them to learn about, first of all, you've got to think about industry. So the financial industry will be different to the mining industry.
Yeah, if you're getting into the video industry, back in the day when Blockbuster was the main player, without understanding the moves and shifts in that, you would be, a few years in, you'd be in a really bad place.
Yeah, and by learning about industries, you're learning about the makeup of a particular economy.
Yeah.
So in Australia, there's like 11 different what they call global industry classification standards, the GIC standards, but basically they're just industries, makeup of industries. You've got tech, financials, mining, consumer staples, industrials. The other one that I'm thinking about is consumer, not the staples, but discretionary, stuff. So once you understand the industries, then what you can probably do is just pick one or two stocks within one industry. So if it's financials, think about CBA and Westpac,
And you know what? They've invested in each other. If you look at their share portfolios of both companies, they own parts of each other.
Yeah.
All four.
Yeah. And even so it could be, Woolworths and consumer staples. So that way what a young person is doing is that they might be shopping at Woolworths, but they might, as they're studying about Woolworths, they know the intricacies of how that supermarket chain actually operates.
SubhanAllah, the perception, and that's an amazing. I've just had a really amazing thought right now. So I'm coming at it from a telecommunications viewpoint. That's my industry, and you're coming at it from a financial viewpoint. I'm looking at Westpac, Woolworths as one of a couple of the biggest telecommunications networks in Australia. Woolworths owns one of the largest data centers in, where they are in I don't want to say where they are because we don't want to expert, but where the head office is. Yeah. There's one of Australia's largest data centers holding some of the most intricate and advanced telecommunications equipment in Australia, owned by Woolworths. I'm looking at them as a telco.
Yeah.
You're looking at them as a supermarket.
Yeah.
And if you're going to go and investing into that industry, they talk about diversification. what you're pointing to there around investing in different industries, so that if one industry is losing money, the other one is making money, and therefore on average you will be making money. But even within the same industry, there's diversification.
100%.
If I'm investing in a super fund, my super fund is diversified. If I'm purchasing a CBA share, that CBA is diversified in its investments.
Yeah, it's
on its back end.
yeah.
But it's not the same diversification as if I own two separate.
Correct.
However, sometimes when you're purchasing two separate things, so say for example, you're buying two separate banks, or you're buying two institutions that are somehow related. I had an investment in a particular company that owns a mine overseas. And that mine overseas was invested in by my super fund, unbeknownst to me. That mine went bust. My super fund took a hit, and my diversification didn't work because my share took a hit at the same time.
Yeah.
Because they were both, even though I was diversified from this end, I didn't do enough research to understand that diversification had a single point of failure overseas.
Yeah, I mean, you can have naive diversification, yeah, because you might invest even in different companies, but the correlation to interest rate movements might actually all be the same.
That's right.
Or the correlation to a certain economic cycle might be the same. So
sometimes you don't know what you're investing in. Like I purchased Century Group once.
Yeah.
I thought I was buying Westfields, but that's a real estate industry fund. It's not Westfields at all.
Yeah.
And they don't pay you a dividend. They pay you like a rate, like a rental return.
Yes.
Which is treated differently in tax.
Yeah.
So it's sort of, even when you do your research, it may not be the same thing.
Yeah. Yeah, but and probably the point I was probably trying to make is that when you have young people just researching a company or two, and then there's research different companies in different industries, it's not about the physical money that they're making or not making. The important thing is the knowledge that they're getting through that journey, because we need our youth to understand how the world works, and sometimes that's why I say, like, with that goal setting, it's not necessarily about making money, but it could be for a spiritual goal, but it could be for an educational goal in terms of how can I invest for the purpose of getting more knowledge, Yeah. So initially, I always I'd love to get my son, for example, he's 10 at the moment. I've got a idea, plan, what I'll do with him when he's 12 and when he's 14, and it's around that game, I'll give him 3 companies, okay? I could give A2 Milk, CBA, and Woolworths, right? Tangible things, right? And then tell him to research those companies and do what is called a Porter analysis, so very simple analysis, right? And then find out get them to write it down. So they're going through a process, evaluate it and critique it, and ask them questions that they haven't thought about, and then get them to do it again. And then what you can add to that is valuation techniques. How do you actually value a company? How do you think about it in terms of price points and entry points and exit points and plan of what you're trying to invest in?
Margin of safety.
Yeah, margin of safety, exactly, all those things, right? So what happens is that if you can do that with a child starting from, as young as 12, I think they're capable of doing it. And obviously they evolve over time. By the time they get to their first, they do university and stuff, they're now highly evolved, sophisticated.
Most kids these days do a part-time job at uni even.
Yeah.
So it's if you're thinking wait till they're finished, probably that's the point where it's too late.
Correct. Because some of the best roles that I've seen in the investment management industry, by the way, an industry that that is like anything, it's a double-edged sword.
Yes.
Okay. But some of the best roles that I've found in the industry are investment analyst roles, where a person's coming straight out of uni, right, and they're getting straight into an equity analyst or a credit analyst role. And what they're doing is they're evaluating companies and the equity or credit worthiness of investment in that company. But what you do is when you do a submission, you get grilled. So, later on in my life, I got into those sort of roles where you're putting something in front of an investment committee and they're grilling you. Right? You've got 7, 8 other people there that are older, wiser, more mature, more
Have you thought of
experienced than you.
this? Have you thought of that?
Have you thought
what are our exposure here? What's our exposure there? Yeah.
Correct. And being able to answer those questions and show
With
that
confidence.
with confidence, and that you've done the diligence and you've done the work.
Yep.
And you've thought about all these different things. That can only come with time and practice. So the earlier you start with kids around that process, it's not really about the money then. It's more about education.
Yeah. And what do you think in terms of budgeting? So that's the investment side of it. What do you think of the bucket system around in budgeting?
Yeah. So
in some form.
Yeah. So I'm at the moment 45 years old. I still got a budget.
Yeah.
Okay. I've had a budget for the last 25 years. My whole life is on a spreadsheet. Okay. Okay. Literally. Right.
Yeah.
And a lot of people look at me and they say, you're a bit anal.
How do you know where things are going otherwise?
Yeah, exactly. I've got everything on that spreadsheet. And that's just common. Like I just see it as common sense.
It's a family habit.
Correct.
Because you can't do a budget as a parent or as a husband or a wife or a child. You can't just do a budget on your own and expect everybody else to follow it. They've got to be involved in the budgeting process so that they know what's going on.
Correct.
And then they are a part owner in that. Because again, the budget is there, is the behavior there.
Correct, 100%. And it's a way to monitor that behavior as well. And it's a way to prioritize your life and what you put value to, right?
Mm-hmm.
At the end of the day, like I know young people that are newlyweds and the like that are heavily in debt.
Yeah.
Heavily in debt, and then they've got a stressful life, and the husband's got to work around the clock.
And stress is a big factor when it comes to marriage and the quality of the marriage and longevity of the marriage.
Correct.
It's because you're coming home stressed every night, and you don't have time for the kids because you got to whatever, and you're not emotionally invested in them because you're stressed out about this thing or that thing. It takes its toll over time.
100%. It has multifaceted impact on your life.
Mm.
And so budgeting helps that. Now people probably don't understand how interest work or compounding works. Simple things like if I take out a car loan, right, and these car salesmen are very tricky at enticing you to spend more than what you can really afford and what you really need, right? And then all of a sudden, I've met so many young people. They'll say, "Oh, but I only got it for this much," and I just put a balloon payment, and I've put a little balloon payment on, and all I have to do is this, and after 5 years, it's, and I'm like, "Wait, let's hang on, let's just do the maths, let's just do the maths, go through the maths," and they end up getting shocked when they find out they've nearly paid double.
Yeah.
For what they thought they were paying for the vehicle over that period.
If they had just waited until they were 43 like me before buying the car that they wanted, they wouldn't have to worry about it.
So,
Although you get a sore knee and you can't drive it properly, it's all right.
Yeah.
No, I think, that's a big deal. A budget every month? A unique independent budget every month?
I'd say what you do is you monitor it on a monthly basis.
Yeah, because your bills aren't the same every month.
Correct. And what you do is you won't really hit the mark until after you've done it for a year, right? After you've done it properly for about a year, you'll be able to categorize things into different buckets, and know where your spending habits are going.
Yeah,
right.
And sometimes you'll be surprised when you look at it on paper, just black and white, where it's all actually going.
Correct.
Like takeaway food. It's
correct.
Very easily can grow, and oftentimes your health will pay the price of that because you're eating all this takeaway food, but the healthy stuff is sitting in your fridge waiting to be cooked.
Yeah, 100%. And And then later on, what you can do is you can allocate for that going out. You know, after you get into like a little system.
Have you read The Barefoot Investor?
I have, yes.
That's a really cool book.
Yeah.
I would recommend that book.
Yeah.
I think they've stopped at because there's a thing at the end where they ask you to. I think it's like a website or a subscription of some sort.
Yeah.
But he no longer does that. But the contents in the beginning and the middle are quite.
That's right.
Like the date night.
Yeah.
And making it an event and really appreciating the fact that okay, we're not unlimited spending, but what we do spend, we make a big deal out of it.
Correct. And like, yeah, exactly. So once you get into the habit, you know, your holidays, your fun can be budgeted in with confidence.
And you're not worried about how much I'm spending.
Correct.
And when I get home, am I going to have enough to, you know, finish off the rest of the month after my holiday?
Yeah.
And the other side of the equation, which I think you do, I am just judging from our slight conversations that we've had, you can budget the giving.
Yes.
So Shaitan is no longer involved in that conversation where you've allocated now a bucket to benefit the community or give away to a cause that's and speaking of that, please, we are open to sponsorship. Obviously, if you are in a position to give, we do a lot with very little. So Alwasi TV, we'll leave in the comments below some of the details around if you want to sponsor an episode, if you want to donate, or if you have any suggestions on guests or ideas that things that we can cover on the show, please feel free to leave that in the comments. Sorry, I just had to put that plug in.
No, that's actually an excellent point.
Yeah, but you can budget the giving, and then how beautiful a feeling is being able to give without having to worry about covering yourself for the rest of the month.
100%. I mean, that's a brilliant point because your charity component is just another item in the budget.
Yeah, you're building your dunya and your akhirah.
Yeah. And you're getting 70-fold for that investment return there. So
that's Sayyid Hassan was saying it a couple of weeks ago. I think we did the one where it says what a deal you're getting where the rizq that Allah gives you, you invest, you give it away, and then Allah will reward that investment by multiplying that rizq and bring it back to you. And it's subhanallah.
You know, Sayyid Hassan will probably be happy to hear this, but after the last khutbah on Friday, I spoke to my wife the very next day. I said, you know, Sayyid Hassan gave this khutbah yesterday. You know, I think we should do X, Y, Z.
Yeah.
Yeah. Okay. You know, and she was like, you know, I'm already doing, you know, ABC. Right, with Lebanon, you know, because her family has been impacted with what's happened in Lebanon, her direct family. I said, well, why didn't you tell me? Why didn't you tell me? Like, you know, we can share in this, know, and do it that way. And she's like, yeah, I'm happy to do that, you know. And we talked through it, and we just said, look, we've got the budget here, and we just pulled out the budget. And we just said, look, you know, why don't we just do X, Y, Z, you know. And go from there, and you know you'll be happy with that, and that way we can do it together, and we can do it with.
You probably have a larger impact as well.
Yeah, and we can do it with the dua that, you know, hopefully this barakah protects our family and our kids. You know what I mean? Like, and
you're giving wholeheartedly.
Yeah,
it's no longer a giving with a bit of fear or a bit of doubt or trepidation. It's wholehearted giving. Is subhanallah.
Yeah, so Sayyid Hassan gets the credit for all of that.
That's Sadaqah Jariyah, I believe, Sayyidina.
So he was saying, he made a joke that his khutbah was boring, but I sent him a message saying, no, it wasn't boring. It was actually very impactful.
Yeah. Most of them are. Most of his khutbahs are. And I think the way he presents it with a bit of humor and a little bit of... when he's serious, you know he's serious.
Yeah.
And it's in the eyes. And when he wants to bring a point to you, he has his ways. It's a love-hate thing. He knows how to get to you where he needs you. Alhamdulillah. He's I call him, he hates it when I say that, but he's a pillar in our community. He really is. I mean, and you'll be surprised at how many things he's involved in. Have you been to our Dua Nutbah?
No, I haven't.
You need to come to our Dua Nutbah. Okay. How could you not be coming to our Dua Nutbah? Friday morning, Fajr prayer.
Yes.
What time do you start work usually? About 9, 8 o'clock?
No, Friday is actually, I've got a good day on Friday.
Yeah. So come
don't have
5,
to, yeah.
5 we start the salah. It's 5 o'clock, Sayyidina. It's 5 o'clock salah.
Yes.
And then the du'as after that. We finished everything up about an hour and a half. We have a big breakfast, mashallah,
Yeah.
and we enjoy each other's company, have a bit of a laugh, a conversation.
Mashallah.
It's in the mosque, Al Mahdi Mosque,
Yes.
all of it.
Yes.
And then the sun comes up, and it's a
Yes.
beautiful day. We all go back to our
Graduating
daily
Saturday.
lives. And as the Sayyid always says, when you do the dua nuzbah, it blesses you from week to week. It's a barakah for you from week to week.
Yeah.
And I've personally been touched by it quite significantly. And I can attest that it's from her first-hand experience. It's an amazing thing. So you're welcome to join us. It's this Friday.
Yes.
Yeah,
Mashallah.
absolutely.
Wow.
But it's going back to the budgeting side of things, because the real the attraction and the fast-paced side of finance or money for a young person is the whole investment and then the spending side of it. But not a lot of people find the budgeting stuff boring. But the real value and growth is in the budgets, right? Because say, for example, you do an investment and it does work and it pays big.
Yeah.
You could lose it quickly if you don't know how to budget nice.
Yeah. Yeah. It's you got to think about goal setting, and budgeting plays to that.
And you got to be realistic, or even harsh on yourself.
Yeah.
Particularly at the very beginning. Like my advice sometimes, I give over advice sometimes with the view that they're not going to really do it, but at least if I give them a small bit of advice, then they'll probably fall short of that. But if I tell them do this really hard thing, if they fall short of that, they've done what I took. So I tell them, look, first 6 months of work, don't spend $1.
Yeah.
You're living with your parents, you're eating, sleeping, drinking there.
Yeah.
All your money, you put it away for the first 6 months. Don't touch it. That's your money from now to the day you die.
Yeah.
Don't touch it. That's your emergency fund. That's your, someone's got a flat tire fund.
Yeah.
That's your whatever, right? It's your emergency fund. You leave that pocket, lock it away.
Yeah.
You know where I've got this from. And then after that point, you then break it up into your buckets. Something for spending, to enjoy life with. Something for saving. Something for investing. Investing and saving are two different things.
Yeah.
Because, if you mix that and your investment falls over, you've lost both your investment and your saving. So you save, which is save like cash or in a liquid asset that's reasonably secure and safe, and then invest, which you can diversify depending on the risk portfolio you're looking at profile. What do you think of that?
Look, I would say that you can invest and save in alignment, as long as you know how to invest, if that makes sense.
Yeah.
So what I mean by that is, like, if you think about an endowment fund. Now, an endowment fund, for the listeners, is something with a very long dated profile. So, you're thinking 99 years plus, okay? And what I'd say is, when you think about savings or investing, I think about it from the perspective that you want to try and have a investment target, right? You can have an investment target of 7% per annum, for example, which ticks both your savings bucket,
given the inflation figure at the moment,
and your growth bucket. Yeah. So like inflation at the moment is like close to 4%, right? So you're really making a 3% per annum return on it. But what you're doing is that you're trying to get a 7% per annum return over the long term is very doable.
Yeah.
Right? So when you think about cash plus 3 or cash plus 2% objective, you can hit both those investing and saving buckets off in alignment. That's what I mean by they can be aligned, right? And then if you have excess funds, like you can probably have a different set of funds, right, where if you're started working, you're already accumulating superannuation that your employer is paying into. You can probably make that strategy more growthy and try and attract 9% or 10% per annum. So when you're a young person, you want to have your assets mainly in growthy assets.
So you would recommend the younger you are, So say, for example, when you get that thing from your employer and you select your superannuation fund, and you get the, like my one has an app or whatever, and you can select high growth, growth or whatever, and then you've got cash.
Yeah.
At a younger age,
You'd want to go as high growth as you can.
why is that?
Because over the investment cycle, over the long term, you're likely to get the greatest growth of capital.
Oh, and in terms of the risk,
In terms of the risk, it'll also be the riskiest.
Yes.
It'll also be the riskiest product.
yes.
But like you can see with every downturn, there's always a sharp tick of an upturn.
So you've got more time to make up the
So you've got
difference.
more time to make it. Whereas if you're a retiree that's at the other end of the spectrum,
You want to be more towards
you want
the
to be
cash
more
end.
defensive.
Yeah, okay.
Because you're not going to be able to survive a COVID drawdown or the GFC as easily.
Well, that's right. If you're relying on your superannuation for your income,
Yeah.
and the next 3 years of COVID just happened, and your income is suddenly halved or whatever, that's a big hit.
That's right, and that's called sequencing risk or drawdown risk, right? So when I think about investing, when you think about investing, you got to think about it from 3 perspectives, right?
Mhm.
One is yourself as yourself. You call it yourself, your human capital. Okay, if you're a young person, your human capital is massive, right? Your ability to earn money over that period of time is massive. Now, depending when you get your first role, okay, you can allocate, you can do a net present value valuation of what your human capital is worth, and it'll be the biggest component
So the future value
of
of your money today.
discounted to today. Correct, right? Then it's your physical assets, and generally when you're young, your physical assets are small, right? You like your house, your car, and all these sort of assets that you own. Your investments will be small.
Mm.
So that will probably be your smallest component. Your human capital will be your biggest. And then your superannuation is there that's locked up for retirement. Okay, and that will probably be small as well when you're young. As you're getting older, that dynamic shifts, right? Now, when you think of yourself as a portfolio, you've got to think of all of that holistically. Now, your human capital, if you've got a job as an engineer, it's probably a lot more, has a lot more stability and safeguarding rails than somebody that's a stockbroker. They'll be more correlated with the way the economy works. So if the economy is booming, they're probably booming. Okay, if the economy is going to go into contraction and a recession, the likelihood of them losing their role is higher.
Yes.
So you can see that the human capital is more correlated to like an equity type, return,
Yes.
right? Whereas
Over
an
time.
engineer is probably like a bond type return.
That's right.
So when you think about the overall of your dynamic as a human person with human capital, that's how I like to think of it. So at this stage, like my example, I'm 45. I've got my human capital is probably the same as my superannuation capital, if that makes sense.
Yeah.
They're sort of got to the point where they're about the same.
Mm.
My physical assets are somewhere in the middle there. So when I think about investing in my superannuation portfolio, I've got it in high growth. I've still got it in high growth, right? Because my human capital is still quite sticky.
Mm.
So that might be a bit convoluted to think.
That's quite good in its detail.
Yeah.
And I think the other component around, and a lot of young people don't do this, I know I didn't when I was younger, was do your research on your super funds.
Yeah.
Because far too often we just select your whatever, the tick boxes that
and
says.
the default, yeah. And the default generally a balance fund.
Yeah.
Generally for a younger person, that's probably inadequate.
Mm.
They probably need to be in a high growth fund.
And keep track of it.
And
Look at it. Log into the website.
And
check your
consolidate it.
balance. Consolidate it. Keep track of where it is.
Yeah.
Make sure it's performing well. If you're not happy with the performance of your fund, compare it. There are heaps of magazines I used to check out where they've got the comparisons between super funds performance over the year or over the month.
Correct. Okay.
Keep your eye on that.
Yeah.
Be aware. Be educated in it. Basically, learn, know, understand what's going on because ultimately it's your money.
100%. And
Absolutely.
engage your fund.
Yeah.
So that's another.
So so your funds do offer financial advice. They do offer sessions. You can book in a financial planner. Most of the time it's free.
Correct.
Because you're a member of that fund.
Correct.
Your money in superannuation is insured as well.
Correct.
You got life. I think it's
you've got life insurance.
Total death and disability.
You've got death and disability insurance.
Total death and disability.
Yeah.
There's no partial death.
That's right.
Yeah.
Yeah, but all your insurances, the cheapest way to get your insurance is through your
Through
super.
your super.
It's through your super because
Yeah.
the premiums.
And you can increase that as you need it.
Correct.
Yeah.
So it's a great way to help you manage yourself,
And it's
you
tax
can even,
effective.
Tax effective. You can even nominate your beneficiaries.
Yeah.
Okay. So it's and you can use your super to also be an activist. And I'm one of those proponents.
Yes.
Of activism.
Yes. Be aware of where your money is being invested.
Yeah. And you want your super funds to be morally and ethically invested. You want it to fit with your moral principles and your ethical principles and Islamic values and principles, right?
There are funds out there that I'm aware of. I won't name them, but they're not necessarily Shia Muslim, but they're Muslim. I think
Crescent Wealth?
Yes.
Yes.
Yeah.
So
they with brother Talal, what's his name? Talal.
Yeah.
And Yassin. Talal Yassin. Yeah.
So that's been moved over now from Crescent Wealth to Mercer Funds. Oh, yeah. So Mercer Funds, because of its performance, has taken control of the management of that product.
Because it is a lower performer.
Yeah, it sort of didn't hit a few thresholds.
Subhanallah. You reminded me of a conversation I had with someone when that fund first started. We'll talk about it after off air.
Yeah.
I can't say it on air, but there are options with your. You're not at the mercy of the super fund. It's your money. You are in control of where it gets invested, and you can take control of that and invest it ethically and morally, and in line with the Shia code.
And this is something that I'll probably put out to Sayyid Hassan, and the scholarly world in terms of understanding how the Australian superannuation industry works, and what our religious obligations are over here.
Because it's a powerful industry, big money industry.
Massive. It's bigger than the Australian economy.
And it's bigger than the banks, bigger than the RBA.
It's like $3 trillion savings of Australia. Like the whole world, literally, like the US, Europe, everybody is envious of Australia's superannuation system because it's one of the biggest savings pools that countries have. Only Canada and Australia have this sort of full savings pool. And what it is with the demography of Australia increasing over time, this pool is only going to get bigger over time with an aging population and the like. So
and immigration and growth.
Correct. And even the rate of return that's kept aside, 12.5%,
it's quite high.
It's quite high.
Is that at the top now? Because I know they were increasing incrementally over a couple of years. Is that 12.5?
I don't know if it's hit 12.5 yet.
Okay.
But it's going towards that. Yeah. But the thing that's important about that is that global fund managers from around the world are increasingly looking to get into the Australian market, either through putting superannuation products out there, like Vanguards and the like, the big boys. So what happens is that as a Muslim living in this country, it's very important to understand what our obligations are with our own investments, and those that is our money. So big sort of focus on people knowing what they're invested in, engaging their super funds. Asking them questions. You're a member of your fund. You have every right to ask them questions and get information. Yeah. And you also have the right to question why they're invested in certain companies.
Yeah.
Right. And don't forego that right. There's a can I put a plug on a website we've set up?
Yes, absolutely.
Is that okay? Yeah.
This is your platform. Absolutely.
So it's ethicalsuper.org.
MashaAllah.
There's information in
We'll
there.
leave a link on the screen as well. It'll probably be appearing underneath one of our faces right now once in the post edit. And we'll leave it in the comments, inshallah.
Yeah. What we've done there is we've created a couple of templated letters that you can utilize. So first of all, there's a lot of information in there. Read it. There's a document we took a lot of time preparing for in there. There's a lot of information there about the Australian superannuation system, how big it is, how it influences society, how you have a role in it, what are the environmental, social and governance policies that superannuation stipulate within their funds and the like. And there's a lot of information there. So first I'd say read it because it's important. It's good knowledge for us to have. And then there's 2 letters in there, templated letters. All the work's done for you. We've researched the top 10 biggest funds in the country, looked at their investments, and there's letters there that arm you with the ability to engage your fund and ask just very simple questions. Why is my fund invested in this company, which has been deemed as illegal by the United Nations in breaching certain laws? And you've got an investment in it. And how does that corroborate with your own stated environmental, social and governance policies? How does it corroborate with your signatories to the United Nations Principles of Responsible Investing? There's a lot of things these funds attest to, but when you look and
do they talk the talk, or do they walk the walk?
Are they really greenwashing investments? Are they, and this is your ability as an activist member to be to take that right to ask them these questions.
Can they reach out through that website to yourself and your team?
At the moment, no, but we want to create that.
Like a chat or something?
Yeah. So
in the meantime, leave a comment under this video. We're probably at time.
Yep.
Leave a comment under this video if you'd like to reach to Brother Turab, or we will leave a link to the website, and we'll also reach out through our website if you'd like further information on that. And while you're there, don't forget to click subscribe, hit that like button, leave a comment, and again, we'll probably leave some details below as well around if you'd like to sponsor an episode, if you'd like to be a guest, or if you'd like to donate and be a part of this in some way, or if you have a suggestion of ways we can reach out to the community and provide. I would love a session talking about that website at Al Mahdi Mosque one day. So Sayyidina will write that down as a. So we've got the financial literacy. We've got the budgeting course, and we've got this one as well. So lots of beautiful things to happen and to come, inshallah, in the future. Thank you, everyone else, for joining us. Thank you, brother, for Hajj, for joining us this evening and being very generous with your time. We're very grateful for it. And may Allah accept your amal, and may Allah bless you and your family, inshallah.
Likewise, Hajj.
Thank you very much.
God bless you for all the great work you're doing.
Allah khalina yak Sayyid. Thank you very much, guys. Have a great night. Assalamu alaikum wa rahmatullahi wa barakatuh.